Hey, it's Peter from Nova Home Loans here, your friendly loan officer. So I've been thinking for a little while now that I need to do a video about, if you're thinking about buying a home in the next few months or even next year, there's a few things that you should absolutely do and a few things you definitely want to avoid. And this primarily applies to, a new buyer. If you've been through this before, you're going to know a lot of this stuff. Maybe it's a good refresher. But these simple tips can really make the difference between getting approved easily and having your loan delayed or even denied. So, number one, pay every bill on time. Mortgage companies, underwriters, they love consistency. They want to see your discipline, right? Even one late payment can affect your credit score. That's, within the last couple of years. Automatic payments, that can help. Stay consistent. I know before I got married, I couldn't break a 650 credit score. I just couldn't do it. Got married. My wife, Chloe, instilled in me some new disciplines. And we've been 800s now for, over 10 years. So I didn't have to really get disciplined. The automated payments sort of did it for me. So definitely do that. Now, it's important to mention not only paying bills on time, but there's something going on with student loans. If you are a student or have co-signed for a student and had student loans, there's a big problem right now we're seeing with anyone that was on the SAVE plan. And I want to read to you one of the biggest issues. Millions of borrowers who were placed into administrative forbearance because of legal challenges to the SAVE repayment plan are now being told that they must choose a different repayment plan. The Department of Education has started sending these notices just up a couple of days ago they started. And borrowers generally have 90 days from the notice to switch plans. If they don't, they'll automatically be placed into a standard repayment plan. So, it's just a phone call. And a lot of times these are income-based repayment. They can be very inexpensive, $10, $20 a month sort of thing. Maybe more if you make more money. But that definitely beats potentially hundreds of dollars a month payment. And if you have student loans right now in collections, look, this is a hard stop for a mortgage. I have a client right now where, they co-signed for their kids' student loans, kids not paying the student loans. It's thousands of dollars in collections. There's like 5 or 6 of them. It's almost 10 grand in collections. And that balance just keeps going up. Literally every day the balance goes up because interest keeps getting charged to these things. So they're in kind of a hard place right now because they don't want to have to pay their kids' student loans off or at least get them current, but they're going to need to if they want to move forward with this refi. So I really thought that's important to mention because there's millions of people that don't realize that this is taking place. And if you get that letter in the mail, you need to open it. You need to look, you need to get that sorted. You need to start paying your loan back so that you can, continue growing your credit. And if you have bad credit, you need to try and get some consistency there. So another keep your credit card balances low. So the general rule of thumb I've seen over the last couple of decades of pulling credit reports and talking to credit specialists and this and that is you want to have credit card balances no greater than 30% of your available credit line. So if you have a credit card that has a $10,000 available balance, never go above 30% or $3,000. If it's $1,000 limit, never go above $300, right? So, and I'll give you sort of the why. The algorithm wants to see that you have credit utilization, that you have credit and that you're using it. You're borrowing money and you're paying it back on time. But it also wants to see that you have credit discipline, that there's money there available to you to use but you're not using it. If your utilization is too high, it can look like there's evidence of struggle. And that's a no-no for the algorithm. So you want to make sure you never go above 30%. The ideal ratio is somewhere between 10 and 15%. So use the cards, use them sparingly, pay them off. That's how you get the credit growth, and you also don't pay much interest either. Another thing, don't open up new credit cards during this process of wanting to be pre-approved unless you have been told to by your loan officer. Okay, so the algorithms really like to see anywhere from 3 to 5 good open accounts. That can be credit card, that could be student loan, it could be a mortgage, could be a car loan, could be a personal loan, whatever. It wants to see you have a bunch of reasons for it to provide you that good credit score. So 3 to 5, okay? Remember, you're exercising the muscle of borrowing money and paying it back on time. Another don't make large deposits into your bank, again, unless you've been explicitly told by your loan officer to do so. So the large deposits are going to throw up a red flag for underwriting, because they have to track literally every dollar that gets deposited and flows out of your account. And any deposit that exceeds 1% of however much you're borrowing, they're gonna have to source that. So here's a little trick. So any money you plan to use for your mortgage, it has to be sourced and seasoned for 60 days. Meaning, okay, so today is July 7th. If I want to start looking into buying a house in October, that means I need to start depositing money no later than the end of this month, so that by the time we're 2 months from you wanting to get pre-approved, that money is already 60 days old, right? So any money you plan to use for the transaction, you're going to have to source it. Any money that you take out of a safe or the shoebox out of under your bed, it's got to be sourced and seasoned. The primary word here is seasoned. It's got to sit there for 2 months. After it's there for 2 months, they don't ask any questions, right? So make sure it's there, deposit the money, 2 months. Another thing, you cannot borrow money to be used for down payment or closing. Can't borrow money. You can't go and get a personal loan and use that money for a down payment. I mean, there is actually some gray area about that. And it revolves around the sourced and seasoning part. So there is a little gray area. If you want offline, I can tell you what you need to do on how to use some borrowed money. But, let me put it to you this way. As long as whatever money you plan to use is at least 2 months old and in your bank, you can use it for the mortgage. Okay? I'll just leave it at that. Now that includes if you make money from gambling, let's say you sell a motorcycle. There are some ways for you to use, like let's say you sell a car and you sold you sold a car for $5,000 for cash. As long as we can reasonably prove where the money came from, meaning you sold a 2010 Honda Accord for $5,000, the title was in your name, you have a bill of sale that shows the buyer who bought it, they paid you cash, and that day, the day that you sold it, you can show a deposit of $5,000 into your bank account. We can reasonably gather that that's where that $5,000 came from. And in most cases, underwriting is going to take that. So there are some, like I said, there is some gray area with cash that you can use for a down payment. Another thing you want to do save more money than what's required, okay? So what do I mean by that? If you know your down payment and closing costs are gonna cost you $9,500, strive to have 15 grand in the bank, okay? You don't know what's gonna happen in the deal. You don't know. You could find, here's an example. You could find the house of your dreams, the one you've always been looking for, okay? And the house might need some work for it to pass homeowner's insurance. Let's say it needs a new water heater and it needs a new HVAC or something, and that costs 4 grand. And it could be the house of your dreams, and if the seller maybe doesn't have the money to pay for that so that you can get homeowner's insurance, you might have to come out of pocket for that if you want to proceed with buying that house, right? So there are situations where you definitely want to have a little bit more left over in the bank, and not even for just that reason. Underwriting, the algorithms like to see reserves. Reserves is extra money left over in your bank account after the sale, okay? So here's an example of what a reserves is. Let's say your mortgage payment is $1,500 a month, okay? 3 months of reserves would be $1,500 times 3, so $4,500 left over in the bank after closing. Sometimes the Fannie Mae Freddie Mac algorithm will only get you an approval if you have reserves. And we're only going to know that once we have your file and once we've ran it with DU or LPA, desktop underwriter or loan product advisor. So we're only going to know that once we've gone down the rabbit hole a little bit, which is okay. Typically that happens with your, oh, hey Mando, look at that thing, isn't that cool? Typically that only is required, reserves, is if the credit scores are, let's say 640 or less, or there's very high debt to income ratio on the loan, or if it's a non-QM product, a non-qualified mortgage, like a bank statement loan or an investment loan. There's a lot of reasons, right? Can't go into all of them here, but at the end of the day, you want to have more money in the bank than what you're going to need, okay? Remember, you're going to have moving costs. You're going to have to turn on your electricity. You might have to get new furniture. I mean, there's a whole list of stuff, right, that you're going to have extra money for. So always strive to have an extra few grand at least above and beyond whatever I tell you loan officer wise, okay? If you're self-employed, here's another do. Keep your tax returns current. Have them available for at least the prior 2 years. If we're late in the year, underwriting might ask for a P&L. So, have the ability to produce that if it's asked for. Here's a don't co-sign for anybody unless it's absolutely necessary and you've gone over it with your loan officer. The key to this stuff with preparing to buy a house is you've got to communicate, okay? You've got to communicate with me with what your plans are, what's happening in your life. I had to co-sign for my sister to buy a car. It broke down, blah, blah, blah. Okay, that might not be the end of the world. That might not be something that kills your chances to buy a house, but we have to know, and it's much better to know this stuff up front than us finding out 3 weeks into closing, whoa, we just did a new credit pull and there's this $600 a month payment that just popped up, and why didn't you tell anyone? Don't do that. Tell us, hey, I had to do this. Does it affect my ability to be pre-approved? I'm going to be totally straight with you through this whole process. So make sure you're straight with me with what's happening in your life. It can only make this process go easier for you. Look, at the end of the day, real estate agents, loan officers, underwriting, we're all investing our time in this. But you're the one who's investing your money, okay? You're investing in inspections, in escrow deposit, in appraisal. You're going to spend money on this thing, whether or not you buy the house. If somehow it fails later, you don't get that money back, right? Your escrow, in most cases you will, but the inspections you paid for, you're not. So I don't like to ever just throw something at the wall and hope it sticks. I want to make sure that you are pre-approved and it's solid. Along with buying a car. Typically, my advice is don't buy big ticket items. Don't buy toys. Don't go buy a boat. Don't go buy a new four-wheeler. Don't buy jewelry. Don't buy, a huge television. Unless, again, we've had that talk that it's not going to affect your pre-approval, you've got plenty of money, or in some cases, like I mentioned a minute ago, we needed to open up a new credit card and we went to Best Buy and we bought a new surround sound for the new house. Okay, as long as, again, you share, okay, how much did you borrow? How much is the monthly payment? We put it in your liability. Usually it's not a big problem. Again, that communication with me is really huge. So another ask questions early. A 15-minute conversation, a half-hour conversation with me could save weeks and months of frustration on your part. I don't even recommend looking at houses, talking to builders, any of that until you've had this done first, until you know that you actually have the ability to buy a house. Otherwise, why are you going to waste everybody's time, right? A real estate agent, they're not going to want to waste their time if you don't even have the ability to buy. Do everyone else a favor. Make sure you have the ability first. I consider that just a courtesy to the person you're working with. I know it's exciting and all that sort, but there's more than just you involved in this thing. And agents invest their time, their gas money, into maybe showing you a house, and you have nowhere near the ability to be able to buy one yet. It's not really fair to them, right? You wouldn't want someone to waste your time like that. So I always recommend talk to a lender, talk to me first. Let's figure out a game plan, and then let's execute it together. And the phone call we have, it doesn't matter if you're a month away, 6 months away, a year away. I'll help you figure out the game plan that will be the best for you, right? Tailored to your situation. If you're thinking about changing your job, don't do that unless you have another job lined up in a similar field, that sort of thing. Any major changes that you're going through, plan to go through, or haven't planned to go through, you need to communicate with me, because all of that stuff affects your ability to be pre-approved and then your ability to buy the house at the end of the day. So I think the one thing that I cannot stress enough, and the one major takeaway I'd like you to have, is communicate with your loan officer. Be honest, be upfront, be responsive. If I ask you for documents, there's a reason we need them, right? We have to prove to underwriting your worthiness of being able to buy a house. That's really what it comes down to, right? Not everybody can buy. Not everybody is gonna buy. But that communication, that's how you extract decades of good financial advice and the avoidance of pain, right? Look, buying a house is not the most fun thing in the world. It's stressful, it's aggravating, it's frustrating, it's exciting, it's, oh my God, I'm buying a house. All that, it's all of those emotions mixed in, okay? Look, loans, mortgage payments are not sexy, okay? They're not. But the house you're gonna move into, I love it. We've lived in this house now 12 years. I can not imagine life without having our own space. The ability to garden, plant flowers, paint, artwork, decorate, whatever. I can't imagine life outside of that, right? So if you're thinking about buying a house, number one, I'm so excited for you to be brave enough to even go after that, right? Because there's a lot of people who are afraid to do it. So I'm very excited for you that you're even thinking about it. And I pride myself really on two things, and that's being available and being responsive, which means throughout the process, if you have questions, if you're concerned about something, it's Sunday at 8 o'clock, just call me, text me. If I'm not available, I'm going to get back to you immediately. That is a massive pet peeve that I have with loan officers that shut their phone off at 5 o'clock during a process that frankly is pretty scary for a lot of new buyers, right? So I'm not that guy. I'm going to help you hold your hand through the process. So like I mentioned, if you're going to take away something, it's this: communicate with your loan officer, communicate with me. We're going to figure this thing out together, and you're going to get those keys to your own place. Thanks for watching.